Thank you, everyone. We'll resume our public hearing of the Anti-Money Laundering Counter-Terrorism Financing Amendment Bill 2024. I now welcome our representatives from the CPA Australia, Chartered Accountants Australia and New Zealand, and the Institute of Public Accountants. Thank you for taking the time to speak with the committee today. Information on parliamentary privilege and the protection of witness and evidence has been provided to you. For the Hansard record, can I ask you to each please state your full name and the capacity in which you appear today?
This is Belinda ZOHRAB-McCONNELL and I appear for CPA Australia.
My name is Karen McWILLIAMS and I'm appearing on behalf of Chartered Accountants Australia and New Zealand.
Good afternoon, everyone. My name is Irwin. I'm from the Institute of Public Accountants. I'm a technical advisor in the Advocacy and Professional Standards team at the Institute of Public Accountants.
Okay. Thank you very much for joining us today. We've got the benefit of your submission, so thank you very much for that. And I was just going to ask if you have a brief opening statement before we go to questions.
Thank you, Senator. Yes, we do. And thank you for the invitation to present to the committee today. The three accounting bodies do have a joint opening statement. Firstly, we'd like to acknowledge the traditional custodians of the lands of Australia and their continued connection with the land, waterways and communities, and pay our respects to their elders past, present and emerging. Chartered Accountants Australia and New Zealand, CPA Australia and the Institute of Public Accountants together represent 350,000 professional accountants in Australia, New Zealand and around the world. Our members work across a wide range of sectors, including in practice, from large firms to sole practitioners, in business from major multinationals to SMEs, the public sector, not-for-profit, and in academia. We support the Anti-Money Laundering and Counter-Terrorism Financing Amendment Bill 2024, which expands the regime to include professional services, many of which are offered by our members. We welcome the proposed competitively neutral approach, as the designated services can be performed by other providers, not just professional accountants. We were pleased to see much of the feedback we've made to earlier consultations has been reflected in the drafting of the bill. We are concerned that the designated services, which include assisting and planning corporate restructures and handling a person's money, may unintentionally capture registered liquidators appointed under Section 5.3b of the Corporations Act 2001 to a small business as a restructuring practitioner or to a small business restructuring plan. Under these appointments, they do not stand as an officer of the company, rather assist the directors of a company. We seek for their explicit exclusion from the regime. Our members in practice vary greatly. For some, the provision of the proposed designated services currently comprises a substantial portion of their business, while for others, it comprises a small or incidental part of their business, and some others do not provide these designated services at all. The cost of complying with the regime for those of our membership who will be newly brought into it will vary significantly. However, all practices will incur a substantial time and financial cost in advance of the commencement of Tranche 2. We are concerned the cost of preparing to comply with the regime will disproportionately impact small practices because some costs will be foundational and independent of the size of the practice. The timely passage of the bill will help to minimise costs because it will allow sufficient time to develop the rules and industry-specific guidance and models, and for new reporting entities to use these to prepare to comply with the regime. Ongoing costs could be reduced by the introduction of complementary legislation, including the establishment of a beneficial ownership register and the linking of director IDs to company registers. Additionally, the fees for reporting entities to search various ASIC registers to undertake customer due diligence should be removed. Currently, an industry contribution levy is paid by reporting entities, with some entities exempt. Given there will be a cost burden for new reporting entities to become compliant, and that the extension of the current regime to such entities benefits all Australians, we consider that no additional costs, such as an industry contribution levy, should be imposed on the new reporting entities. The definition of a qualified accountant in Section 5 of the Anti-Money Laundering and Counter-Terrorism Financing Act 2006 should be updated to align with Section 88B of the Corporations Act 2001 and Asset Corporations Qualified Accountant Instrument 2016-786 to include members of the Institute of Public Accountants. To conclude, we are very supportive of the need for these reforms. We acknowledge that many of our members are providing these designated services, and we've welcomed the engagement with AUSTRAC has had with the three accounting bodies to date. We look forward to working with AUSTRAC and the Attorney-General's Department in the development of the rules and the guidance to support our members in implementing these requirements. Thank you, Senators, and we're willing to take any questions if you have any.
Thank you very much, and thank you for that opening statement. We're going to go to questions. I believe, Senator Scar, you have questions. We'll go to you first.
Thank you, Chair. You can hear me?
Yes, we can. We've got you loud and clear. Thanks.
That's excellent. Registered liquidators. Why shouldn't registered liquidators be caught?
Well, the registered liquidators are appointed as an individual. They're not appointed, so it's not a report, an individual appointment. Now, the point we're making is that such that I guess registered liquidators actually won't be captured generally as part of the AML, because when they are appointed, they stand in the shoes of the company, and so therefore they're not actually advising the company, but standing in the shoes of the company. However, the one exception to that is under the new legislation that came in during COVID for small business restructuring practitioners. Now, in that particular instance, the small business restructuring practitioner, who is appointed as an individual, actually still continues to advise the company. Sorry, Belinda, could you perhaps go on mute?
Sorry, if I can just interrupt you for one moment. Ms. McWilliams, we've got a bit of a feedback loop. Someone might have the live feed going at the same time. It's very helpful if you can all mute your... Turn off the live feed. Turn off the live feed, just leave the video, I think. I think we might be okay if we all do that. Thank you. Sorry to interrupt you, Ms. McWilliams.
No problem. So I guess as I was explaining, the newer part of the legislation, which is the small business restructuring, the way they are appointed is they actually act as advisors to the company, so the company is still in the control of the directors. So there's a slight difference in that, and we're concerned that they may be captured, particularly in relation to handling client monies and also in terms of restructuring a business. Now, in those two instances, they are what they do is bound by the legislation. They're heavily regulated already by ASIC. They are, and they're also basically directed in terms of the directors and obviously accountable to the creditors. So I guess what we're saying is there isn't much risk of money laundering when you're dealing with a small business restructuring. And it's really, I guess registered liquidators will be exempt under all of the other areas that they deal with. But this particular one, because they don't stand in the shoes of the company, they could be captured through that, and we're just seeking for a specific exemption of those particular appointments.
Okay, so it's I better understand now. It's a particular concern with respect to this new category, or relatively new category, of restructuring practitioners who assist in small business restructures, which theoretically is an easier and less expensive way for a business to deal with solvency issues. So typically they'd be accountants, is that correct?
Yes, they would be.
Right. So
and we're not.
Yeah. So presumably it's the way the exemption would work would be in the course of providing that sort of restructuring advice, that itself wouldn't be a designated service, correct?
Correct, but we would only be seeking the exclusion for that specific appointment under Section 5.3b of the Corps Act. So obviously any other restructuring advice that is provided in any other format obviously is not regulated under the Corporations Act to that same level, and that is not sort of what we're seeking. So we're specifically seeking it for those appointments.
Okay, understood. Have you had any discussions with the department in relation to that, or is this just an issue that's emerged on the basis of the current drafting of the bill? So do we know if there's a policy reason behind this?
We're not aware of it. We have raised it, and certainly our concerns earlier in the consultation process was that potentially all registered liquidators would get captured. The way it's currently drafted, our main concern relates to this particular type of appointment, because the way it's worded such that because other appointments, the registered liquidator would stand in the shoes of the company, that would not meet the sort of proposed definition. So It isn't something that's particularly new. It is something that we have been raising ongoing, but this particular one, I guess, remains outstanding.
Okay, understood. Okay, thank you. We'll certainly raise that, or I'll certainly raise that with the department, see if we can't flush that out. In relation to the Financial Services Council, given the planned implementation date of 31 March 2026, just moving back from that, when would you really need there to be reasonable certainty with respect to the content of the rules?
Look,
from a logistical perspective, what should be the time frame? Let's assume the bill's passed before Christmas. There's still a few sitting weeks, so let's assume the bill's passed before Christmas. When would you need, what sort of period of time would you need between the implementation of the rules, or reasonable certainty with respect to the content of the rules, and when the new scheme goes live? Is there any, feel free to take it on notice, but it's obviously it's a key issue. You're not the only ones who've raised it, and people need time to prepare. At the same time, we've got this review occurring with respect to whether or not we're meeting our obligations under the relevant treaties, etc. So I'm just interested to know, in terms of logistics, what do you think's required for preparation?
Look, I think we are reasonably accepting that there are other deadlines at play here. So, everybody would like as much time as they could have, but that's not going to be possible in this instance. I think we are reasonably comfortable that if the rules can be finalised very early next year, then that gives a good full year, over a year for implementation. It's not perfect, but it's reasonable, I think. But if we're going to see these rules take a long time into next year to be finalised, that would be, would very much eat into that implementation time, particularly because we don't feel that, I guess, the guidance and all of the other support and education can really be properly developed until we actually have the rules in place. And that's going to be the key piece for us, obviously, is being able to talk to our members and be able to say, this is what your existing obligations are, and this is how they would relate to the AML requirements, and these are the kind of extra things you would need to do. Now, we will only have that clarity once the rules are finalised. Okay.
Is there any visibility now with respect to what's going to be in the rules? So do your organisations, as peak bodies, do you have some sort of expectation as to, these are the things we expect to see in the rules, or what? Obviously, this scheme's been rolled out in other jurisdictions, so does that mean there's some level of understanding of generally what's required? I'm just trying to get a sense, if you like, as to whether or not when the rules come out, the first draft of rules is released, this is going to be a revelation and my goodness, this has all come out of left field, or to what extent can we reasonably predict what's going to be in the rules?
I think we can have a reasonable prediction around what's in the fundamentals. For us, it's really going to be the nuances in relation to how they are drafted in order to recognise our members' existing professional and ethical obligations. And certainly we noticed, for example, that the legislation wording was changed in relation to the client customer due diligence, trying to expand my acronyms. So the customer due diligence to refer to reasonable steps. Now that, I guess, enables our members to also consider the kind of steps they take under customer due diligence in relation to the ATO's Know Your Client obligations. So it's those kind of bits, perhaps, that we would seek to try and clarify. And I think the reality is we're not going to know that until we see them. And it's those nuances that are going to be quite important to our members.
Okay, understood. And also, in terms of access to resources, if I've got a small accounting practice and I want to hire a consultant to come in and assist me to do a risk assessment, to review the business, review the services I'm providing, my client base, and then roll that into a set of, into a policy, into procedures, how's that? Do you have any thoughts with respect to how those services are going to be mobilised, the capacity in the market for the provision of those services, the roles for peak bodies in terms of assisting their members to comply?
Look, I think that's probably a different one. I wonder, Belinda, if you might be in a bit more of a position to just start that one off and then I'll take over.
Certainly. We have already begun working with AUSTRAC in terms of the educational methods, methodologies, how to reach our members. We've been talking about how we'd like to engage them in terms of developing realistic scenarios and the development of tools and models which would be suitable for our members to lever off as they develop their AML programs. So that conversation has already begun, but we certainly would like to, we'll be planning on expanding that with webinars, obviously online materials and various different kind of modes of education and information updating. And as Karen said, the sooner we have the rules and subsequently the guidance developed, the sooner we can develop those education materials. Okay, understood. Any other thoughts just on that subject from any of the other witnesses we have with us?
I might just jump in with permission from the Chair. It's Irwin Bushnell from the Institute of Public Accountants. The AUSTRAC have commenced the engagement with the professional bodies around this. So they've set up very specific industry groups. So to date, we're very encouraged with the engagement we've had with AUSTRAC on this, and we're very much part of the process. So I just wanted to add that in. It has voluntarily commenced, and as Belinda was saying, we've had the first, engagement around the communication to our members, and we're very much looking forward to the following industry engagement with AUSTRAC on the development of the rules and then the guidance and tools for our members.
Are there any learnings we can benefit from in terms of implementation processes, in particular in New Zealand? And I know Chartered Accountants Australia and New Zealand should be well placed to provide commentary in relation to the good and the bad in terms of implementation in New Zealand. Are there any learnings from that experience and matters that we particularly need to focus on?
Yes, certainly. I think, look, one of the key pieces has been, and we're certainly cognizant of that, is actually engaging with our membership during the process of developing the guidance. Now, that's not to say we weren't engaging during it in New Zealand, but actually it was very hard to get our members engaged at that time because often our members have so much that they're currently dealing with in the current realm. It's very hard to engage them in what's coming forward. So we're certainly very conscious of actually getting that real life member insights, what they're doing in order to ensure that the rules and the guidance really link into what they're currently doing. Another key point I would make is probably we had, I guess, although the legislation is going to be principles based, and that's very important, the lack of clarity sometimes around whether a particular service is captured or not captured is really quite fundamental. And we certainly had the experience in New Zealand of having a decision come out the day before the legislation commenced, which then basically sort of created a lot of confusion around whether a particular service would be captured or not, with nobody, including the supervisor there, really being willing to say it's in or it's out. And of course, then our members are left, being told, well, you've got to go get legal advice. And that, we had a number of members who thought that they were only doing this particular service, they wouldn't be included. Suddenly they're now thinking, well, am I? And so that certainly that experience was not something we want to be going through in the Australian regime. So we're certainly looking to ensure that we do have clarity and can really be clear to our members, if you're doing this particular activity, it's in or it's out, and not that kind of grey area in the middle, because that means that, they aren't in a position to prepare properly. And certainly for some of our members, that made the difference between being part of the regime or not. So quite a significant piece. The other thing I'd probably mention is around that sort of tools. And
sorry, just on that point with respect to tight definitions of designated services, as I understand it from your submission, the only grey area you're concerned about at the moment is in relation to restructuring practitioners. But I'd be keen to know if there are any other areas, and take it on notice, if there are any other areas where you think the drafting should be tightened to avoid that situation, because we don't want those subject to the tranche 2 reforms to be subject to that uncertainty, right? So if we've got an opportunity to leverage off the learnings across the ditch, that would be very beneficial. And then I interrupted you. I think you were talking about tools.
So, yes, I think the final point I'd probably make is in relation to tools and guidance. I know certainly our members would have really liked to have had, I guess, supervisor issued templates or guidance, and that was probably quite limiting at the time. And so we as a professional body did develop some how-to guides, but we had to be quite careful, because obviously we're not in a position to tell our members exactly how to comply with the law, and obviously this is a sort of legal obligation. So I guess the more that, and as Irwin's indicated, really the way we are working closely at the moment with AUSTRAC is actually very positive. As the three bodies together with AUSTRAC, I think we certainly feel like there's the opportunity here to really sort of co-develop the guidance to ensure it's fit for purpose for our membership, but also ensure that it is coming from AUSTRAC and therefore our members can have real confidence in it. Because certainly the tricky thing would be is if we don't have that certainty from them, and then everyone's trying to work out, well, how would the supervisor, how would the regulator in this case interpret that, and that does create more time and a lot more confusion for the membership.
Yep. No.
Senator Scarr, I'll need to share the call shortly. We may have some time at the end if we're not joined by Senator Shoebridge, but I'll just flag that with you if you've got another question or two to put, and then I'll hand the call to Senator Polly.
Yeah. Well, I've just got one question, and it's a very genuine question. Can someone explain to me, walk through what proliferation financing is?
I think the reality is, Senator, probably none of us are in a position to do that.
Okay.
It's not our kind of, it's not a space that a lot of the risks associated with the accounting profession are more closely aligned with the money laundering aspects than they are with the proliferation financing. So that's generally where we have probably focused more of our attention.
What is proliferation financing?
That's probably a good question, but I'm not sure we're the ones who are going to be in a position to answer that.
Okay, right. I don't feel so bad now.
We might be able to ask one of our other witnesses, Senator Scarr.
Okay, thank you.
I will hand the call over to Senator Polly now. Senator Polly?
Yes, thank you, Chair. And can I thank you also for your submission and for making yourself available today. This is a very important inquiry. I just want to have a sense from the Chartered Accountants. You support the bill, but I was just wondering if you could just outline in a bit more detail how you see the role of Chartered Accountants and their involvement and how they play such a crucial part in detecting and preventing criminal activities.
Yes, certainly. I guess, look, we are supportive of the bill, and as I think as Senator Scarr indicated, a large proportion of our members in New Zealand are already complying with similar requirements in New Zealand in that jurisdiction. So I guess our members are bound by ethical obligations. and they are certainly not out there wanting to, have clients who are involved in these sorts of activities, and they also support the broader economy and community. So I guess our support for this is really bound by the fact that this is something that is important to Australia's interest and to the broader economy, and therefore we want to ensure that our members are meeting, I guess, global sort of best practice expectations of themselves, and ensuring that they are not in any way inadvertently being caught up in criminal activity. And so these sorts of processes, I guess, that will be put in place, and the vast majority of which our members are probably already undertaking. But I guess that increased awareness and heightened understanding of where the risks for money laundering sit will enable them to actually better manage their risk as a practice.
Thank you for that. I should declare a conflict of interest. I have a daughter who's an accountant, so I better declare that. Just in terms of, I don't always admit to that, I must say, in some places, but in terms of the work that is done in this space, just wondered what have been the designated service models that this bill is using. You said already there's New Zealand, you've spoken about what they do over there. Is there any other designated service model that this bill has been based on?
I'm not entirely familiar with other ones. New Zealand is the one that I'm probably closest to. I have spoken to some of our counterparts in jurisdictions such as the UK and Canada, and know that they take a different approach. From our perspective, we're quite comfortable with the designated service approach, particularly because in this jurisdiction, anyone can call themselves an accountant. Not anyone can be a member of our professional bodies and be bound by our code of ethics. So we are particularly concerned that if, but I suppose we're particularly happy that the designated service approach has been taken, because that ensures that, I guess, criminal actors aren't able to go, well, OK, we won't use a professional accountant for these services, we'll find someone else who can do them. And I think that's one of the things that's quite important to note, that the services that are being designated can be undertaken by others who are not part of a particular profession. And I think this way we ensure that we're displacing that risk by, I guess, only regulating our members and putting them to a higher bar, but others who call themselves accountants and do that kind of work are not having to actually comply with these sorts of regulations.
Great, thank you for that. Just in terms of the consultation process, obviously, you know, your submission outlines quite a few things, but I was just wondering, in terms of the consultation that was done, have there been any other issues that you brought forward which the department has taken on board when drafting this bill?
Yeah, I'm happy to. Belinda, did you want to answer that one?
Certainly, thank you. Senator Scarr mentioned earlier about the definition and the drafting of some of the designated services, and we did have a concern about the drafting of several of them during the earlier consultation back in June with the Attorney General's Department, and those our comments and feedback were taken on board. So, as I said in the opening statement, we've been very, very happy with that, and you can probably tell by the brevity of our submission that much of that feedback has been taken on board.
Yes, that's great. I just wanted to get that again on the record. But you note in your submission that bill minimises regulatory burden for new reporting entities. Can you outline in ways in which that's in the legislation?
I think, Senator, that particular comment related to the removal of a requirement to risk rate pre-commencement customers.
Is about to be tested. This is a test.
Sorry, there's testing, but it's all right. We'll be able to keep going, but just please ignore the alarms. Timing is everything.
I can always take over for you as well, Senator Polly, if it gets really noisy.
You're on fire again, Senator Polly.
I'm always on fire, Senator.
pre-commencement customers. So one of the particular things that we were keen to see was in an earlier consultation, it had indicated that new reporting entities would have to risk rate all of their pre-commencement customers. Now, that would create quite a significant burden for reporting entities. And I guess particularly when you consider some of what the designated services are and how accountants might interact with their clients. They might do one of those designated services for their clients and then not do another one for quite some time. And so I guess we were quite pleased to see that that exclusion was put in within the bill, so that actually the focus is on risk rating customers when they have a designated service. So basically from the start of the bill ongoing. And I think that certainly does reduce that unnecessary burden, because some of those pre-commencement customers may never come back with a designated service. So it would be quite a waste of effort and just be a significant additional time and expense.
We've timed that very well. I managed to mute before the noise started. Just my final question, Chair, and that is, it's already been evidence that's given today, or it's been outlined by a number of witnesses, that we need to get on with this. We're running out of parliamentary weeks, and I was just wondering what your views were on the current commencement date and the need to prevent any delays for new reporting entities. So would you be encouraging, the Parliament to get this passed in the next couple of weeks of sitting? Would that be your view? I don't want to put words into your mouth, but I'm just interested.
I think, as we indicated to Senator Scarr into his question in relation to the rules as well, our members need as much implementation time as we can give them, and we need the rules therefore to be finalised for us to work on the guidance and the support, and sort of working backwards from that. Obviously none of that can start until the bill passes, and so I guess that's where we're really coming from in terms of that sort of timing. I think there are some minor things as we've raised in relation to the bill, but I think it's not something that we want to see. We still want to see it passing and hopefully fairly quickly, because the risk is it delays and then we're certainly eating into our members' implementation time, and that's not something that we want to see.
Thank you very much. Thank you, Chair. I think they're going to test again, Paul. I'm still on fire down here. Thank you, everyone.
Thank you, Senator Polly. Good to hear, I think. Senator Scarr, we don't have our other Senate colleague, Senator Shoebridge, back yet with us. Do you have any other final questions? And then we might have a short little break while we get our other witnesses in front of us.
Look, I did have another question. I was just interested to, if someone could walk me through the significance of the definition of qualified accountant and the need for it to align across the different legislation. Why is that of particular importance? So just for the benefit of Hansard, the definition of qualified accountant in Section 5 of the Anti-Money Laundering and Counter-Terrorism Financial Act 2006 must be amended to align with Section 88B of the Corporations Act and the ASIC instrument that's referred to there. Why is that important, and what's the confusion caused by the lack of consistency at the moment?
I'm happy to talk to you about that one, Senator Scarr. So the Act as it stands at the moment, 2006, has a definition of a qualified accountant in Section 5, which says, as a member of the chartered body and CPA Australia, Chartered Accountants Australia, New Zealand and CPA Australia, and any other body named in the rules. And the rules don't, as they currently stand, don't further expand on any other body as such. Since then, we've had contemporary legislation in the form of the Corporations Act 2016, Section 88B, which gave ASIC the authority to pass a legislative instrument or a class order, which expands on that definition of a qualified accountant. And that class order has a definition of a qualified accountant as being a member of the Chartered Accountants Australia, New Zealand, CPA Australia, and the Institute of Public Accountants. So to sum it up, it's pretty much bringing the Act in line with the current Corporations Act, just to make that alignment, because the definition in the Act at the moment is a lot narrow, or not as expanded as what's in the current Corporations Act and the ASIC class order. Does that explain things, Senator?
Yeah, it does. It does beg the question, though, as to what extent would members of the Institute of Public Accountants be captured by the legislation? To what extent would they be providing designated services?
To the extent as the other two bodies or members of the other two bodies would be. Our members provide very similar services, albeit perhaps a different client base in terms of the designated services.
So it doesn't really, sorry to interrupt, it doesn't really matter to an extent who you're providing the service to. It's really the nature of the service, and then who you're providing the service to could well inform the steps you need to take in response to your obligations. So if you're doing a transaction for a Commonwealth department, that's a different kettle of fish to doing a transaction for someone who's just flown in from a distant jurisdiction and is carrying a bag of money. Yeah?
Yeah. So the designated services that, like I said, the Chartered Accountants and CPA Australia offer are no different to what the Institute of Public Accountants members would offer. So we really need to be part of that definition of the qualified accountant. Okay. And it's also, like I said, to bring the Act into 2006 into alignment with contemporary legislation 2016, where the definition does include our members. So really crucial for us. If I can leave the senators with anything today, that would be the thing I would please ask you to provide for us.
I have heard your exhortation.
Thank you, sir.
Thank you.
Thank you,
Chair.
Thank you, Senator Scarr. I believe that's all the questions we have for you today. So thank you very much to the CPA Australia for your attendance and your submission and your involvement in the consultation process. So we've taken on all of your views on board as a committee. I think we have our next witnesses